Welcome back. And it is all-time high for gold prices, $2,260 an ounce. I mean, we started this year with $2,050, so we are more than $200 up in the first quarter of this year as well. And the second quarter has started on a very high note yet again. So when you look at the prices, the month of March has seen near 10% of gains come in for gold. For the Indian markets, we are very, very close to that 70,000 rupees per 10 grams of a price. It has been a record-breaking global central buying when it comes to gold. ETFs are also buying right now, and there are a lot of reports in the global market suggesting that there is a lot of short squeeze happening in case of gold as well. The fresh longs, the institutional buying is just about started, so the kind of gains that we are seeing in case of gold can only go higher from here. You know, earlier, a decade or before, you could see a $50 or $100 of a gain in all of 1 year. Right now, it's $50 to $60 of a movement in an intraday market that we are seeing in case of gold. And the jump up has come in even as the dollar index is trading at a 1-month highs as well. So that is gold and silver on your screens. Another 1.5% of a gain is what we are working with in the intraday market right now. And this is happening even as many of the international markets are still shut because of the Easter holidays there. But from here, what is the sense or trajectory going forward? We will take those questions to Navneet Damani. He's head of commodity and currencies at Motilal Oswal. Navneet, hi, thank you so much for joining us. First of all, on the charts, is it looking overbought at these current levels?
Well, Manisha, thank you for having me on the show. Well, definitely it's looking a little overbought, and we've already seen about 8% gains in the first quarter of 24, and this has to be talked about that it's preceded by a 15% gain in the last quarter of 2023. So a total of 23-24% gains coming in the last 6 months for gold prices. This is definitely taking a lot of people by surprise, and the last $150 is more of an exuberance than probably more of macro fundamentals or something that I can say probably bank it on. So technically, it's looking a little overbought, but is it the end of the rally? It's a little too early to say.
Navneet, we do understand that these are the kind of markets which run on momentum, which is definitely clearly on the higher side right now. So I want to talk about a forecast here as well. So most Wall Street bankers and brokerages still believe that 2,300, 2,400, some are talking about 2,500. I've read a report on 2,700 as a possibility for this year. I mean, as I said, the momentum is still on the higher side. But what is Motilal House view now on gold before we end this year?
Well, we were largely bullish on gold ever since the year started, but we would have been better off if this would have come in the third quarter or maybe fourth quarter of 2024. Coming into the first quarter has taken everybody by surprise, and most of the people are now banking on the charts which are indicating a bullish momentum towards 2,400, 2,500 in the, say, probably 1 quarter's time frame. However, I would rather probably sit back and reassess the situation, and because from my end, I think risk reward does not favor being long at this point in time. Maybe some bit of cool off or retracement, about 3 to 5% correction could give you a better entry point. At this point, we would like to stay duck and probably wait for 2,300 or 23 something to top it out.
Navneet, also, where do you see the buying coming in right now? Because global central banks have been buying, and the expectations are that by the time the first quarter of 2024 numbers are out, we would have seen stronger global central buyings as well, as we have been looking at the month of Jan and Feb, which is quite on the higher side here. Physical buying seems quite absent right now because of the kind of price movement that we've seen. ETF buying is just about started. There's a lot of fund movement happening here, but apart of that, do you see a lot of players now buying at these levels?
Well, over the last 2 years, we've seen global central banks buying over 1,000 tons of gold. In 22, in 23, we witnessed the same. And this year's number, or probably this quarter's number, are anticipated. And as you say, it is expected to be higher than what they've done in the past. But physical demand is kind of very, very shallow. And it will take its own sweet time for the physical demand to materialize, because this kind of movement of 20-22% is not, which is easy to digest on the physical player front. So I think 70 lakh rupees per kg of gold is very, very steep in terms of mindset for the Indian consumer. So they will wait for some time before they jump into buying gold once again. And this could be a time correction, probably 1 quarter where we see people getting more mature towards this buying, or probably a time correction or price correction. Anything has to happen before some meaningful buying converges.
Oh, absolutely. So for the rest of the year, have you guys done any calculations? What is the range that now you see? Because as you are advocating caution, so obviously you are expecting some correction here. So what is the range for this year now?
Well, as I said, this is an exuberance, and how long it could rally and where it is going to end is anybody's guess. Technical parameters indicate that 2,300 or 2,330 could be a level where you could find some bit of resistance, and some cool off could be witnessed. So my bet is we could probably top out in the middle of April, and as we approach May, we could have a reasonable correction for about 7 to 8%. That could converge to about $2,100 on the lower side, where I think some meaningful buying would come.
Okay. Also, how are you looking at the silver prices? Because $25 an ounce is holding right now, but silver far away from gold really in international markets. And the Indian markets, well, yes, we are not too far away from those all-time highs. One, how would you look at this divergence and what's your sense onto this one?
Well, it's been a very big laggard vis-a-vis gold, and I've been vocal about being positive on silver for quite some time now, but the results have not been delivered actually. We ended last year with about 1% gain in silver, and this year we are about 6% up since the start of the year. But it's kind of lacking momentum because the industrial metal pack is still not behaving the way probably it should be. One bit of missing piece is the Chinese demand is kind of little shallow at this point in time, and our bet is big on China. We expect that as we approach the second or third quarter of 24, China could be better than what they are in the last few quarters. We've seen PMI numbers uh, better than most nations in the last couple of months. So I think Chinese demand is kind of coming back, and silver could outperform as we approach the second or third quarter of 24. But as of now, it could be in a large range of 77,000 on the higher side, 74,000 on the lower side on the domestic front, and on the international front, maybe $24 on the lower side and $27 on the higher side.
Okay. And between gold and silver, if you had to pick one, what would your better bet be?
Well, after 23% gains, I would surely be stay away from gold, but silver definitely has been one of my better picks. And maybe from a 3 to 6 months perspective, silver could give you better and more comfortable returns.
All right. Thank you so much for joining us, Navneet. So gold and silver both a buy. Mangalam, do you know that if you bought gold last year, same time, you would have bought it at 55,000. It's at 70,000 right now. So 15,000 per 10 grams of a jump up.
Now that I missed that bus, the question is if I buy it at 75,000, now what happens next year, Manisha?
So you wait for a correction, as Navneet said. So it's expected to come down to almost 65,000 kind of levels, and then you buy.
It's expected to come down back to 55,000?
65.
65,000, okay.
I don't think we're seeing 55 ever now.
Oh, damn, Manisha. All right, that's you broke the bubble. But, you know, for everyone who's watching, they must know that you are not only advising us here in personal capacity, but you've advised everyone on our channel, and as a result of which you were awarded as the best commodities editor as well. So on behalf of the channel and all our viewers, thank you so much for enlightening us.
Thank you.
Right, with that, it's a wrap on this edition of Halftime Report. Manisha and I will continue our gold conversations. In the meanwhile, you watch Business Lunch, which will take all the market action ahead.